Thanks so much for tuning into Talking Point. I'm your host, Neeraj Shah. The Talking Point today is whether the opening up theme percolates in a much better fashion than anticipated across key industries. The point that UBL came out with the numbers, which to an extent surprised a lot of people, is added reason for getting in Rishi Pardal, the head honcho of UBL, to talk about how he viewed the half and the quarter gone by. And is he more optimistic about the second half compared to the first half, the way it has shaped up? Rishi, great having you, and Happy New Year to you and team.
Good morning, Neeraj, and Happy New Year to you and your viewers as well. Always a pleasure being here.
Thank you so much. So, was it a pleasure looking at the quarter two numbers, Rishi? Because there were a few things that stood out, and we'll talk about them in detail. But overall, margin improvement, as some people say, better than expected as well, but there were some issues. And more importantly, the optimism about the second half as India opens up.
Yeah, I think I've said this for the last few quarters now. Our sales are really a function of how open the markets are and what happens with on-premise consumption. And, looking at last year, what happened with the rollback of those COVID-related taxation. So all three have progressed since the second wave in the right direction. And we have seen in Q2 the impact of positive movements in taxation. We've seen the impact of opening up of bars and on-premise, and indeed overall the markets, right? So month on month, we are seeing progression. For the quarter, our index of recovery was about 78%. For the month of September, it was about 88%. So, clearly things trending in the right direction for us. And provided there is no third wave, which I'm also hoping that will not happen given all the vaccinations and so on and so forth that's going on. I think we should continue to see this progression.
No, I mean, what stood out, Rishi, obviously amongst other things, was the volume growth. 49% versus prior year. I think 23% versus quarter one volumes as well. Have October and November lived up to their billing, so to say, compared to what you've done in the first half, or maybe compared to what you did in Q2?
Well, as I said, there's month-on-month progression, right? So if you really look at Q1, you had May, which was completely impacted by COVID, right? Wave 2 had started impacting us towards the end of March in some markets, and certainly by the third week of April everywhere in the country. That was, as we all have in our collective memory now, perhaps one of the worst periods for COVID in the country, right? And so Q1 had that. And that's why, Neeraj, it's important for us not to look at so much the previous quarter or even the previous year, but I've been putting the focus of the team on looking at 2019, and that's why I speak of the index of recovery. Now, look at the last known normal year and compare things to that from a volumes perspective. And that's where I spoke about the 88% in September, right? And again, I think barring two markets which still have policy issues, everywhere else, our index of recovery is actually 100% or 100% plus. So that's really where I think the progress in the business is. We also had a challenge in Q1 of last year in terms of shares, and all of that has corrected. So we've had 3 or 4 quarters of also correcting our shares, right? So it's been a combination of both opening up of markets, but also the work that we've done with share recovery in most areas where we had issues.
Okay, maybe I don't know if I missed you saying that, but the premium portfolio, since you're saying that you benchmark it against the pre-COVID levels, so while the growth has looked impressive, it's still not quite there, or at least it wasn't quite there end of September. Has it reached there? How do you see that piece performing? Because both you, which is the largest beer company, and United Spirits, a largest spirits company, are both talking about premiumization being a big thing, I presume.
Yes, absolutely. And if you really look at our premium portfolio, the recovery is faster than the overall average, right? And so that is really what gives you the confidence. Now, again, there are state mix issues there, but on the whole, you have more established brands like Ultra that have led the recovery. At the same time, we've had new launches in the market or other launches that have happened in recent times, like Ultra Wit Beer, that continue to meet the milestones that we set out for them, right? So it's really a combination of all of that. And then looking forward, there's also the entire excitement of now trying to marry real consumer needs that we have in the market with Heineken's portfolio, and trying to see, where and when we would like to deploy some of the solutions we have from that portfolio, right? So it's a very exciting time. As I always keep saying, beer is an underpenetrated market. So really the story is about how do we expand the overall base for a beverage that, is a social beverage and something that is lower on alcohol content relatively. It's something that can really, drive and explode in the next few years to come, right?
In fact, since we're talking about top line and volumes, I just want one more thought from you. We were speaking to a Delhiite yesterday, who's a markets commentator, who said, okay, in North India, the marriages don't start without the bottles opening. And Delhi's come out with this policy as well. I know you mentioned in the con call that it is still a bit uncertain. But any thoughts from when you spoke about this on the con call until now, as time has elapsed a little bit? And what if some of the other states try to emulate what Delhi has done, so to say? What are your thoughts here on this whole thing?
Yeah. So conceptually, the headline is that the policy in Delhi actually talks of more consumer choice, right? So they have removed certain restrictions, and there is to that extent a freer market, right? They've also lowered the legal drinking age and so on and so forth. Now, all of that augurs very well. I've always maintained that any policy that drives freer markets plays to our favor because we have the brands, we have the reach, we have the strength to go out and engage with consumers and drive share, right? So that's the first part. At the same time, every policy in its rollout phase has its share of teething issues. So we really need to see and how to work through those, and it'll take some time for things to settle down. But those are more procedural aspects. Those are aspects of market settling down, finding the routes to market, the new players coming in, and so on and so forth. So I'm less worried about that. There we need to have some patience. So conceptually, I really like the direction of a freer market.
I'm sure you do.
Come with it. Yeah.
Yeah, but no, I'm just trying to wonder if indeed, there's also talk of something happening in Bihar. I'm just saying if indeed there are some more states and some more areas which kind of marry something similar to what Delhi is trying to do you think that's a bit of a J-curve effect enabler for consumption of beer?
Yeah, so it's a tough one to answer because some of this stuff is also because every state is in a different position. You mentioned Bihar, right? They are in a position where there is sort of prohibition, right? And then you have a Delhi which is moving to a freer market. Other states are in various stages in between, right? But clearly, if markets open up, legal drinking ages come down, India is a hot country, rising affluence, younger population. All of these are the reasons why we believe that penetration of beer is not a fulfilled story yet, right? So, if that happens, of course we welcome.
Yeah, no, I'm sure you welcome. I was just wondering if it actually has the potential to make it a J-curve effect, or does it kind of mean a steady state enabler of sorts? Just that big.
Again, I think it's the overall thing that will happen, right? So as long as there is a level playing field, if we are going to have, let's say a unified policy across the country, these things make it much easier for companies to operate, right? Today, we operate in an environment where almost every state has a very, very different sort of a to market. We have to have breweries in every state. So it depends to the extent to which this harmonization happens and whether that harmonization will really facilitate the interstate movement without punitive duties. Now that could be a J-curve, right? Both for our own efficiency as well as for, the markets that we serve. So I think it's a combination of both, right? It's not just a policy of saying a freer market, but it's also how free is it? Is it just free within a zone, or is it free across the country, right?
Yeah, or maybe that's, as much as I would love it, I think that's a few years away, if you will, if not decades. Yeah. But anyways, okay, shifting a bit of a focus to the operational metrics as well, Rishi, and quite surprisingly, and I know you addressed this, but I would love you to just talk about it and how October, November are shaping up as well. The gross margin performance was surprisingly good. A lot of analysts, when the numbers came out and we had gotten those comments for our stories, expressed surprise as to how did you manage to do it. So my question is just that: how did you manage to do it?
So I think we've been saying this for the last few quarters now. When we saw the volume deleverage last year, and it was a very significant volume deleverage, we put in a lot of cyclical and structural actions in place to make sure that we improve and optimize our cost base. We improve the positions we take in the market, strategic sourcing, so on and so forth. So as volumes have leveraged up, we have seen some goodness coming from there, right? Having said that, As you are aware, oil at 84 is definitely inflationary. And we now have to think about how to mitigate the new trends, whether it's in kraft paper, whether it's in aluminum, whether it's the oil and oil upstream products like freight and so on and so forth, that we got to really manage through all of those things, right? So I'd love to say that this is the end, but no, as usual, there are sort of new sets of factors that have emerged. But I'm quite confident that with the razor sharp focus the team has on managing cost, we'll be able to get through some of this, right?
No, I mean, I heard inflationary pressures across the chain, including, I believe, glass input materials, which are trading at some higher spot rates, etc. So do you reckon, okay, I'm not asking for a specific guidance, but do you believe it's safe to assume that while Q3, Q4 may be good, or as things stand, it may be difficult to emulate what happened in Q2, both on the gross margin and the EBITDA margin front?
We are always conservative in our outlooks, right? I think the important thing for us is to understand the quantum of the input actions that will hit us, and then build plans to mitigate those, right? It's impossible to say right now where some of these commodity cycles will end up. Who knew 12 to 15 months back that we are going to see this kind of inflation suddenly in the market, and not just in India, right? It's global. And so, and now I'm hearing widely contrasting views between how long this will last. Some folks talk of Q2 of next year. Some folks are talking of a longer term, sort of a secular trend of inflation. So we really need to see where this goes.
What's your sense?
So my sense is that, we should be agile, and we should plan out in a strategic manner where we are going to hedge ourselves, where we are going to strategically source. That's no different than what we've been doing in the last few quarters, and that's what we'll continue to do. I mean, if there's one thing COVID has taught me personally, and I think us as a company, is that agility is the name of the game. We are unable to predict so many different things in the right fashion. The important thing is to have the agility to respond.
Got it. Rishi, just one quick follow-up. I mean, so many companies have said this, and which is I'm asking you, across the business spectrum, that Q2 saw a culmination of a bunch of logistical challenges, whether you were exporting, whether you were importing, or whether you were doing it intra-India as well. What was your experience as a company? Are things easing up a little bit on the cost and the availability front, or are things continuing to be challenging?
I think it's a mixed bag. There are some states where we continue to see pressure. There are others where things have sort of stabilized at a higher level. So it's a mixed bag for us. And really, honestly, it's because we don't have a unified environment to operate in across the country, right? So we have, let's say, which brewery services which market is always a complex thing, and it just doesn't depend on inflation. It also depends on the government policy. It depends on changes, so many different things, right? So I think for us, it's a mixed bag. And I don't see that this is going to be the end. I see that, this will continue for some time, right? So the markets have still not stabilized. And I think what we will see is a mix of vectors pulling us up and down. So again, the important thing is to recognize each one and deal with it, right? So earlier we used to talk of micro marketing. Now we also have to talk of micro manufacturing, micro management of our cost base, and so on and so forth.
That's a lot of things to do, but yeah, I guess that's what it takes, maybe. Just a word, Rishi, on the CCI order, and what's your view there? How do you?
No, we believe that we have sufficient grounds to appeal, and within the available legal framework and process, we will certainly appeal, and then deal with the issue as it comes up. Right? So we certainly believe that there are strong arguments there, and we are working with our legal teams and other advisors to kickstart the process.
Okay, I guess you can't share more than that.
Matter is sub judice. There's nothing more to share at this moment.
Very cool. Okay, the other one good part, Rishi, from such a strong operating performance is what it does to cash flows. And I presume a combination of very healthy cash flows. And I again presume not too much heavy capex, if at all, for the next maybe 18 odd months, puts you in that bit of a sweet spot. What thoughts here? Do you preserve the cash for either some orders like these or unforeseen days? Do you make some large returns to shareholders, if you will? What do you think? What are your thoughts around this?
Well, I think beer is an underpenetrated market, right? So the long-term story is that if we believe that capacities are going to be mismatched and they take time in the beer industry to create, so we will create the right amount of capacity. Right now, we believe with the large investments that we have been continuously making, including operating some or opening up some large capacities in the last 12 months, we think we are covered for the very short term, right? But as the markets open up, we certainly will take the appropriate calls. This is a business that has growth opportunities. We'd like to preserve the strength of the balance sheet and the strength of the cash flows, really mostly for investment in business, right? I think that's really where we come from.
Okay, Rishi, I'll wrap up with throwing something out of the blue, but I'm just trying to understand if there was something like that. I mean, what was there something new that you guys did in the last 4 or 5 months that made you stand up and say, wow, I didn't think of this happening, but it happened. It could be in terms of a new market or operations or what have you.
I think, I would talk of two things, right? One, I think in spite of all the restrictions, the way the team has stayed focused on the critical tasks, right? Be it premiumization, be it, in terms of market penetration, that's noteworthy, right? Every month we are continuing, and I said this before in the interview, meet the milestones for new brands, for example, like with beer. And that's really, truly sort of exemplary. And then on the cost side, and you complimented, us for our performance there, but it's not easy to manage the deleverage impact of sales, right? Last year, in spite of a very heavy deleverage impact, we still didn't go into the red, right? And I think this year, we are starting to see the benefits of that. This is not easy, managing productivity, managing machine efficiencies with COVID-imposed ways of working, with lower volumes to play with. The manufacturing teams have done a fabulous job to keep those efficient plants going. And I think these two things really, continuously surprise me. And that's what also gives me the strength for the future that, when this team can deliver and the chips are down, I'm really looking forward to the magic they can create when, there is a bit of an upswing and markets are open.
But crossing fingers for that, Rishi, because it's great for India as well. You reckon very high probability that the second half will be materially better than first half?
I personally think that, it will all depend on how the COVID wave.
Of course.
And I am extremely hopeful that, with all the hard work that everybody is doing on vaccination, with the care that people are taking, hopefully that will not materialize, right? So I think that is going to be the single large determinant of the next few months.
If a strong third wave, which kind of paralyzes the country, notwithstanding, if that were not to be the case, you reckon high probability for a stronger second half compared to the first half?
See continued progression. I keep monitoring that index of recovery, and I will continue to monitor that index of recovery.
Okay, fair call. We'll leave it at that. Rishi, thanks so much for joining in, and have a great time.
Thank you so much, Neeraj. Always a pleasure. See you.
Likewise. Viewers, thanks for tuning in.